Black founders of startup companies in the U.S. raised less than half of 1% of all venture dollars allocated in 2023. Sharon Epperson joins us now with more on what entrepreneurs and investors are doing to increase funding. Good morning to you.
Good morning, Andrew. You know, for many black entrepreneurs, reaching out to individual investors for money and advice is increasingly important to help ensure their companies not only survive, but grow and thrive. We talked to two startup founders about funding early-stage company and finding the right match. Disappointed with the local dating scene in Washington, Nasa Shelley, an attorney, saw an opportunity.
When I looked for a matchmaking service, I looked for a dating app, and I couldn't find anything that catered to professional black women.
In 2018, she founded Carpe Diem, a dating app and matchmaking service. To fund the business, she sold her condo, drained her savings, and raised money from friends and family.
The growth and revenue potential is massive.
As the business has grown, Shelley has raised nearly $2 million and continues to make her case to investors for funding to enhance marketing, hire more matchmakers, and expand into other cities.
I can't understate the value of getting capital into the hands of minorities and especially women of color to help them fuel their businesses.
I think there's a unique drive for success because of a lack of resources and the necessity to drive optimal outcomes with less support and less capital.
Matching investors with opportunity prompted Jason Ray to start his own wealth management firm based in Philadelphia in 2019. Many of his clients invest in early-stage businesses.
The first thing people should think about is how it frames into their investment policy or financial plan and why they're investing in startups.
If clients want to invest, he advises they know how the company operates and its competitive advantage, evaluate the management team and its track record, and most importantly, understand the terms of the investment.
If the valuation on the company is too high and you as an investor are not getting enough rights or ownership or control or whatever it may be, that may not be the right deal for you, even if the management team and the company has great competitive advantages.
Carpe Diem seized the moment and now has a revenue-generating business.
We have customers, we have members. It makes it a little bit easier coming to the table and advocating for additional funding from investors.
Many startup founders say the goal in finding the right match is finding people who want to invest early and can offer mentorship to help grow their young company into a thriving business. Andrew.
So one of the questions I had is, how much money do you need to invest in the early stage companies? Meaning, how much money is out there or not?
Well, I mean, it really depends. If you're an individual investor and you want to invest in a startup, how much you have to risk. Because, of course, it is a very risky proposition.
Being an angel investor.
Being an angel investor,
right.
You have to be an accredited investor. Therefore, you need $200,000 in your income or $300,000 for a married couple or $1 million in investable
right.
assets. But if you're just giving money to a friend that seems like a great idea, they haven't really gone out and gotten funding yet, you don't have to meet those
right.
requirements.
In terms of guidelines, I assume this is similar, but in terms of early stage companies, the total guideline in terms of how much money you have, how much you'd give.
Yeah, I mean, again, it has to work out to your plan, and it
right.
really is a long-term investment. So Jason Ray, other wealth
right.
managers say no more than maybe 10, 20, 30%.
You like the idea of investing in friends' businesses? Is that a good idea or a bad idea?
I think you really have to believe in it and have to be able to offer something. I like the idea of being able to be involved in a business and offer some strategy, some advice. You're bringing something
right.
to the table that they really need. But, you know, you have to be, it's kind of like money you don't expect to get back necessarily. Depending how early you're
No, it's complicated because sometimes you want to be look, when the friend's business blows up and it becomes amazing,
right, you want to be part of that.
And when it blows up and doesn't exist anymore, you don't want to be part of that.
Exactly.
Right.
Exactly.
Sharon Epperson, thank you.